Retail investors enter Randy Moss Heralds stock market capitulation. The broader stock market closed higher last week despite a rapid weakening towards the end, but those looking for a market shakeout should get some encouragement, according to Goldman Sachs. Shares, Nizirka.sp, Nasdaq.QQQ, Nizirka.dia, Nizirka, IWM, broke a streak of 3 consecutive losing weeks. But Friday's swoon wiped out much of the gains. And retail investors switched cash from stock to cash. Retail added $89 billion in money market inflows last week, Goldman flow trader Scott Rubner wrote in a note. This is a huge step. Don't underestimate the importance of this new flow of money. Besides the sale of the beloved single stock Apple, AAPL, and TSLA, Rubner said. Rubner said this is the straight cash home trade rule, referring to Randy Moss, a wide NFL receiver, emphasis added. This was the largest cash inflow since April 8, 2020, plus $102 billion inflow, he said. Both bonds and stocks were also sold. Capitulation could make it into the CPI report this week. After opening their quarterly statements for the third quarter over the weekend, retail has finally started blinking, Rubner said. Capitulation is near. This is the last permanent asset owner, who hasn't sold, who is moving money right now. Looking at Q3, he noted. Since 1900, 122 years of data. Through the third quarter, the U.S. 60/40 Worlds and Votes retirement portfolio is down -21%, for the second worst year on record. 1974 was the only year worse. During the last inflation peak, CPI rose from 3.4% in 1972 to 12.3% in 1974. Since 1900, 122 years of data. Through the third quarter, the S&P 500 is down -24%, for the 44th worst year on record. Only worse were 1931. Great Depression, 1974. Inflation, 2002. Internet bubble. Since 1900, 122 years of data. Through the third quarter, 10-year USTs are down -17% for the worst year on record. 1987 was the second worst, and bonds fell -10%. To say that 2022 will fall in historical context would be an understatement.